It is Sunday, November 25th, 8:44 a.m. And I wanted to make a video building my watch list. It's been a long time, guys, since I've done a video. You know, I got a little Discord room now. It's free. And, you know, it's been really fun to be in the room with the guys. So that's kind of where I just you know, pay all my attention to now when I'm trading. You know, I don't trade every day. But this last week I've been on vacation, so I got a chance to trade. I actually was in a couple of trades like live with the group and talking them through when I got in, how I'm watching the trade. It was a lot of fun. It was actually really cool. And I hope everybody's well. You know, I'm not as active on Twitter no more because of that. And I don't know, I'm just tired of Twitter. And honestly, like, I just feel like all these guys are just full of frauds, man. It's just really disappointing, you know, because being in trading now for a couple of years and kind of like understanding how it works, now I really starting to understand like how it all works, so I can see the fraudulent behavior, or, you know, just the inconsistencies with all of them, you know, and so it's just kind of hard to stay on, you know. Just, I don't know, it's just disappointing, man. These guys are lying to you, and they don't even need to, but they just do it anyway. But with that said, I want to make a quick video building a watch list for tomorrow. So the way, you know, you kind of find your watch list, guys, I'm in Thinkorswim right now, and what I do is I have the scan where I just look at the biggest percentage gainers. Sometimes you can filter by biggest percentage gainers or most volume traded, and then just do like the biggest percentage gainers and the biggest percentage losers, and you kind of just go through that. Now you're gonna say, well, I don't have Thinkorswim. Remember, you can always go to FinViz, and I have a million videos on my YouTube channel talking about this. You can just go to Screener, very simply. You go to All, and then you just do like, you know, you just do whatever you want. So you can say current volume. You can say, hey, I want to look for stocks that at least have a minimum of 1 million shares traded. Sorry, 1 million volume, over 1 million volume. Let's say change from the open. You can say, like, I don't know, just to, you say 3%, 5%, 10%, whatever you want. I'll say up 5%, and then it gives me 14 tickers. You know, the market, we're in a bear market, guys, and it's gonna get way worse, and you're gonna see a lot less traders in the market because more and more people are gonna lose all their money, and they're gonna stop trading because they're going broke. Don't believe all this economic bullshit. People are doing hard, are struggling more than you think. So here are my tickers, right? And then what you do is, if you want, you can go to charts. And then what I like to do is I like to go to candle, because it makes it easier to see. And then from here I can just look at these charts and then kind of see whether or not I want to place a trade on any of these. All right. So that's kind of how you do it. I'm just gonna go through. I'm just gonna use Thinkorswim because it's faster, and I'm just gonna go through. So you can see, like, this stock 424% CAFS. Now, this thing doesn't have any volume, you know, so it's not even worth me looking at, you know. With the interactive brokers, this is a stock that you may be able to short, but I'm not going to look at this, so I'm just going to skip through this. TIFS would be a stock that I would look at tomorrow. Now, reason being is because, you know, it's up 164%. This thing went from 62 cents to 248, and then it retraced all the way back, right? Gave a lot back. So this is what I would be thinking. Now, let me pull up the big chart just to show you how this works. All right, so I'm going to eliminate all my support and resistance lines. Like, you know, I tell you that you should always be mapping your support and resistance lines. And let me just remove this Fibonacci thing that I have here, just to focus primarily on this, right? So I like to go back, you know, 30 days, sometimes 90 days on a 30-minute time frame to get a sense of where the stock is moving or have moved in the past. You know, when you see a stock gapping, you definitely want to map your overhead support and resistance. So, you know, this thing spiked all the way up to over $2, and if you look at it, I would have mapped a line here because this was a clear pivot point, meaning the stock trended all the way down to about that 212 level. They gapped up to about that 376 level, and then gapped kind of down again. And you can see it had a lot of support here at this you know, like 245 level. And if you notice, you can see how if I go across, you can see there's a lot of support here. Even though there's not a lot of volume, there is support there. And if you notice, if I go back, look where it topped out. It's not an accident. Well, two reasons. 250 is a whole number, psychological resistance barrier, but it's also, there was a clear level of resistance there. So what I would be doing for Monday for tomorrow is I would be mapping the support and resistance levels, meaning the areas where it pivoted. So, you know, it couldn't hold that 248 level. So I would really, just to be deadly, you know, accurate, I would map the 248 level here, right? And you can see that it gapped down, it pivoted right off this level. So I would map that 155 level, and then you can see it kind of had some resistance here once it broke below that 190, what is that, 192 level. All right, so what I would be looking to see tomorrow, and then let me look at what's below it. So here there's a level 140, and then there's this level here, which is 119, and then, you know, you get all the way back down here to the 60-cent level. Eventually it's going to get back there. All right, this is a dog shit company, and there's no reason why it should be up as high as it is. Now what I would be looking at is, I like to trade off the 2-minute time frame, sometimes the 3-minute time frame, either or I think as well, because it gives you a clear direction of where the stock is going. So tomorrow what I would be looking to see is, I would be looking to see the stock fade at some point and then spike into one of these areas, either to 193 or 211, and then get rejected and then continue to fade to risk short off of. Now the problem is, and this is what all these fucking fake gurus tell you, so you see a guy like Steven Ducks, who in my opinion is combining paper trades with real trades, and you know, you join his room and you're like, yeah, this guy shorts makes like $80,000-$90,000 on his trades, and you don't realize that he's using Trade Zero, which is a broker which makes it easier to find hard to borrow stocks, and you got to pay a fee before you even get into the trade, you know. And somehow, some way, this guy always seems to get all the shares, and he doesn't get like a little bit of shares, he gets a tremendous amount of shares. He could be getting up at 4 in the morning and trying to search for the you know, the shares, but there's just a lot of red flags. You could DM me on Twitter, and I can tell you why I think he's a lot of what he's doing is fake. But neither here or there. The problem is that when you join these rooms, a lot of them tell you that you got to find the shares to short. Most of these brokers are not going to have the shares, even if you were Centerpoint, which is one of the better platforms, one of the better brokerages where they have shares available. They go fast, and because more people are trading, they become less available. But in the next 2 years, I think that is going to change. I think you're going to see most of these guys going broke, and you're going to see a lot less traders trading because we're in a bear market. So, you know, things are going to change. But that's what I would be looking tomorrow. Now, if you got the spike and you got the sell-off and it held this 155 area, this is where shorts may want to cover either 155 or 114, and you know, you can actually like buy the dip. So meaning the people who are shorting cover, meaning they buy their shares, and you get a little momentum wave, and you can like capitalize on that quick little pop. You know, if you wanted to dip buy it for a quick scalp, you're not gonna hold it, you're just gonna ride it for a quick scalp. That's what I would be looking at for tomorrow for TIS. You also want to see what percentage of the stock is short. So I'll give you a little trick on FinViz. If you type the name of the ticker, TIS, what you want to focus on is this right here. So 16% of the float is short. All right, it's not, you know, it's significant. It's not huge, but it's significant. So, you know, so it's not super crowded with short sellers. All right, so you know, so you may get, so this thing could short. You don't have to worry as much for a squeeze. So the higher the short float percentage is, the more you can expect a float to squeeze shorts out. So that's just something to think about for tomorrow. So here, let me make a watch list for tomorrow. Let's do create watch list tomorrow for 11/26. So TIS is the first stock that I'll put on the watch list for tomorrow. I'm only gonna put a couple. I'm just going through this quick. I'm not gonna make this video super long. Next up is MICT. So I'm going through this. Now this is a stock that doesn't have much volume. Yesterday had 2 million shares traded. It went to a high 89 cents. It's kind of holding this 56-cent level. I'm not gonna put it. It's not volatile enough for me. So this dog shit. This has no volume. Like these kind of charts, just stay away from them. Now Any's interesting because Any, let's pull up the big chart. Okay, Any was a stock that was at $1.91 5 days ago. Hit a high of 718, right? So hit a high of 718. If we look at the 1 year chart, let's pull back 1 year. This is a stock that was at $24 a year ago, because this is one of those 3D printing companies. Now I think 3D printing is the way of the future. It is the future, you know. Do I think this is a stock that you need to bank on right now? No. You could look at the, you know, the disclosure statements, the 10Ks and all that, and see the financials and get a sense of that. I don't know anything about the company, but more than likely it's a shitty company. Now look where it got rejected. Like if you look on the daily, this is the overhead resistance. You see it couldn't hold it. So I would be mapping these levels just to see, you know, just in the event of tomorrow to see what happens. So I mapped this because this is a key pivot point right here, 864. I put 860. So if I want to be actually accurate, I would put 864 here. So that's the next level above. Now the thing about Annie, I think tomorrow it's going to squeeze, and I'll tell you why. I'll share the secret with you. So this is a stock that gapped up, all right, on Wednesday, got to a high 718, found support here at this 408 level, all right, and has been gapping up and got to a high here on this day of 657, all right, and it pulled back, but it's still up. Now I'll tell you why. I think tomorrow this potentially could go higher. Not only because it hasn't faded, right, all the way down, but this is the big thing. So when you go to FinViz, and if you type the stock any, okay, now this is the shit that these fools don't share with you. I'm gonna teach you guys. Look at the float. 97% of the people that are in this stock right now are short biased. What does that mean? And the stock held its high, right? It didn't hold its highs, but it didn't fade, right? It's still higher, all right, than it was on Wednesday. It finished higher. That means that tomorrow you should expect those shorts to get squeezed out, because what's going to happen is if this can't break down and hold above this break below this 526 level, or really even below this 409 level, what you're going to expect is those short sellers to start covering, and they're going to get squeezed out, and the stock is going to go higher. Dip buyers are going to buy it, cover in. Short sellers are going to panic. They're going to want to get out of their position because the stock is not tanking, and they're going to want to get out because the majority of the float is so high. Expect a squeeze. So I think tomorrow this will break the high of that 718. That's my guess. I could be wrong. It could tank. It could have an offering or whatever in the morning and tank, but I would expect it to go higher. So what you want to do is then say, okay, what is the next level above 718? Now, if I go back 30 days on a 15-minute time frame, I can't see it. Let me see if I go back 90 days. So if I go back 90 days, I still can't see it. So I'll have to go back 180 days. When I go back 180 days, the next clear level above is that 864. So this stock, I mean, it could get rejected here. There's some, you know, there's no volume here. That's why you got to look at this. There's very little volume, not a ton of volume. So you got to look at this as almost as a clean chart. But when you zoom in here, like right in this level, this is a potential level where it could get rejected, which is that 760 level. All right, and then you got, you know, this overhead levels above, which is 817. So I would map it just to have something there. So I'll map that 817 level, and then the clear level, the level that I would be most interested in is this 864 level, because you can see how it double tapped it here twice and held. So that is an area to really be mindful of. If it breaks that, then this shit is gonna head all the way potentially to $10 tomorrow, if we have the volume. All right, so now you got to be careful because you get these big dumps. Like you see this, I got to 653, then it fucking tanked. So if you're gonna go long, risking off a key level that was resistance that becomes support, make sure that, you know, be careful, because you don't want to get dumped on. So take profits immediately. These things you can really get crushed. So be careful. If this thing dumps tomorrow and it holds at least like this 409 level, or even here this previous breakout level of 430, then, you know, you can look to dip by in one of those areas and go long. All right, if it holds, you know. But you should also map the levels below it just so that you're aware. So like this to me is a key level here, because this is where it pivoted and it took off, you know. So, you know, you want to map your levels below and you map your levels above. So any is a stock that I would put on my watch list for tomorrow, because it's going to be very volatile. But I more than likely will stay away from this. Maybe I'll buy it. I wouldn't, you know, I'm not going to be able to short it. E-Trade, I doubt, is going to have shares to short. But you know, but I would if I were to like take a stab at this, it wouldn't be with a lot of shares, because in the event I get dumped on, I don't want to be in 5,000 shares and get crushed, you know. So I wouldn't go more than 1,000 shares on a position like this, especially with E-Trade, because you know it's not like a direct market access broker where you're gonna get instantly filled. You got to be really careful. So I would be scared too, you know. So I would be conscientious of that. All right. So TIS, ANY would be on the watch list for tomorrow. Now I'll just go through a couple of more tickers. ACRY now this is a stock that I would be looking to short. This is a stock that I would love to short. But I wouldn't be able to short this unless it was over $1 because E-Trade doesn't allow you to short stocks under $1. But if you with a broker like Interactive Brokers or Centerpoint or Trade Zero, you're gonna be able to short this tomorrow. And if I just to show you how I like to play these, so ACRY would this is how I would play this. All right, let me pull up a 15-minute time frame. So this is a stock that just had volume on probably some news. Now I would map these levels. Now this is what I expect to happen tomorrow. Now this is just my guess, and I'll put it on and then track it. See, you know, if you watch this video, track the stock to see how it wound up doing. See, hey, Omar, you're right, or Omar, you're totally wrong. You know. So here, so I'm gonna map these levels, right? So you can see stock pivoted here, pivoted here. It actually pivoted here for a second too. So I would map this, and I'm using the 15-minute time frame because it gives me a bigger range, right? Pivoted here, right? So now, let's say if I go back on a 2-minute time frame. Okay, so now what I would be looking to see is if you're gonna, at some point tomorrow, even if it starts fading pre-market, you may get a spike. And you're probably gonna get a spike into one of these levels. So you're gonna get a spike into, you know, either the 75-cent level, the 73-cent level, maybe it goes as high as 92 cents, or even, you know, this is another area where you may want to look, maybe like this 80-cent level, 85-cent level, and then it's gonna reject, and then you're gonna see it just fade all day back to 52. I bet you that's what's gonna happen tomorrow. I love to trade those because it closed, you know, sort of, it didn't close red, but it closed weak. So my guess is that more than likely it's gonna tank. So for that, I'll put on the watch list for those of you who do have the ability to short it. I can't do anything. I'm not gonna even look to dip buy it. I'm just gonna completely stay away, but I'll just put it on there just so you can see. And that's what you do, guys. You just go through these tickers and you just kind of go see like, Overstock is up, and it could be because of the holidays. You know, it's been on this downward trend. It had one, you know, big green day. It doesn't mean that it's going to continue on a trend, but you know, because it kind of gapped up, you know, had all this range. You could look at it and say, hey, what it's done over the last 30 days. So this is sort of where it's been over the last 30 days. And if you can see, you know, this is sort of the next level above, which is at 2302. And you know, this is kind of where it's peaked out over the last 30 days on the downward trend, right? It peaked out here at 2192, and because it had all this range, you can look to see, all right, so let me zoom in. So I may look to potentially go long if it breaks above 2196 and maybe over 22 and held. And you know, I'll be looking to see how it responds to this area, key area here, if it pulled back. And then, you know, you can kind of map your areas below. So I would map this, and I would map these levels below just to see how it reacts to these levels, because maybe it's on an upward trend, you know. And I'm just mapping them here, and that's the 15-minute time for now. If I go back like 5 minutes, you can see the pullbacks, and you see how it responded when it pulled back on the 5-minute time frame. So you know, what I would be looking to see is how it reacts at the market open. Is it going to attempt to get back up here and fade? You know, because it has all this range, so you may get some range. So it's a potential opportunity tomorrow just because it had so much range, you know. And you look at the stock history over a year, you know, over 5 years, 10 years, whatever, but I'll just pull up 1 year just so you can see, and you can say, okay, how did it react when it has a big day? Well, okay, the last time it had a big day, it had a red day, then it had a couple of big days, then it had a couple of red days. So, you know, but it can, as you can see here, it had 4 big green days. So you know, it generally gives back when it has you know, range. You see how the next day it goes red. You see, it more than other times it gives it back the following day. So what I would think because of that is maybe tomorrow, you know, you get a push and then you get a nice wash you can short into. So you know, maybe you get a push back up into this consolidation level here. Maybe even here, this 21 sort of like 46 level, and if you couldn't hold it, you get a nice little short where you can go and you short into and get nice range. And these are the stocks a lot of people don't trade that I like to trade, that I make really good money shorting. You know, and nobody's paying attention to them. And these stocks are easy to short because they're never hard to borrow, and they're very easy. Just that, you know, they can be volatile, so you have to be careful when you're shorting. You know, what I like to do is that when I take a short, so let's say for example tomorrow this stock spikes at the open and it gets right into this 2150 level and it couldn't hold. When once I short, I already have my buy cover. So I say, okay, where's an area of support? So I could potentially say, okay, look, this was an area where it had some support, 2110. So if I shorted at 2150, and let's say I shorted 3,000 shares, I may I may have all 3,000 shares like a buy cover order at 2110. Or maybe I cover half to see how the rest plays out, because what happens is then it spikes again and then maybe retests it and then rejects it again and it just continues to fade. So you know, it's just how you play it out, and that's how I get covered. That's how I get in and out of my stocks at the prices that I want, and that's the key. That's and that keeps you disciplined. So maybe you don't get the full size. Maybe, you know, maybe it continues just to tank and you miss a lot. But who cares? I made money, and the goal is limiting your risk on your losses and maximizing and maximizing your gains on your wins. That's kind of like the overall goal, you know. But if you have this kind of discipline, you're gonna make money in the market, you know. So I'll put that on the watch list just because it had that range, OSTK. And then, you know, then you go through all the other stocks. Now I'm just gonna filter this by volume just so I can focus on the bigger priced, the stocks that had more volatility. So I'll put like 2 more stocks on, a couple of more stocks. Now AMD moved because Nvidia moved, so it's moving with Nvidia right now. And if you notice, it had this move up, and it found and look, there's no look, just to show you how support and resistance works. Just to show you, I'm gonna eliminate these lines. Right, so this had a spike on Friday, right? It went from 18 to almost $20, 1980. Now, if I was mapping this and I saw the spike, I'm immediately looking at the overhead resistance. I always start at the highest point. Now look at this, guys. Look at where it had clear support, right in this 1980 level. Look where it spiked and it couldn't break, 1980. See? Because it has all this volume here. It needed the volume to take away, and that's where you go short, risking off. You see? It's not an accident that it broke down there, because this is like a wall here. It needs to break. That's all stock trading is, guys. It's support and resistance. So tomorrow I would put AMD on the watch list. It pulled back, it retraced about half its gains, and it held. Now, in order for it to break 1980, it's going to need a lot of volume tomorrow. Now, what you want to do is you want to say, okay, where's the previous levels of support? Like, I always like to start with 15-minute time frames because I feel like it gives you a better indicator of where the directional changes are. So for me, this would be a key area because this is where it pivoted. This is a key area of support because this is where it bounced. This is where it got topped, and then this is kind of where it pulled back. So I would map this level here, and then I would map this level here. And then, you know, you can go down further and you can map these levels here if you wanted to. Like, this is a level low, and then I would map obviously the low, which is 1718, and this level here, right here, and then this level. So I would see where it's gonna move. Now, if it broke that 1980, you gotta be careful because this is another level where it could typically get rejected at. So that $20 level would be key. You know, I think AMD is gonna tank. You know, I don't think the market is not in a position to sustain, you know, it to continue to go higher. And the only reason why this went up because I think is Nvidia was up, and the reason why it was up because Centron Research gave it a price target. I don't know, he recommended like the stock to be, I don't know what price, but that's what initially caused this spike from 133 to 154. Just because he says it's you know, that's the price target doesn't mean that the market's gonna react to it. You know, he's not always right, so just be mindful of that. So you see, you got this big move up and it consolidated. So if it can't, watch Nvidia tomorrow, watch the SPY tomorrow. If it's all closing flat, expect it to tank. Expect AMD to tank tomorrow with Nvidia and with the SPY. So it's something to keep in mind. So I'll put AMD on the watch list, and we'll see how it reacts tomorrow. Again, use those support and resistance levels. See how it responds at the open. Wait for that spike. If it can't break 1980, that'd be a great level to go short again. Maybe it doesn't have the volume, the range to do it. See, over the last 5 days, it's traded 99 million shares, but it only traded 54 million shares. That's why I couldn't break the 1980. So if you see it in that low range, you know, I don't expect it to break 1980. It's that simple. All right, and I wouldn't touch it unless it was at that key level. All right. Next up, VICI. VIC was a stock that bounced. I'm not gonna look at that. Let me do this. Let me pull up NBEV. Let me clear that out. These weed stocks, they've been pretty volatile. Again, this is a stock that had a spike, right? Look, it faded. You had the spike, and then it got to this key level right here. Is like, to me, is like a high level of resistance on the 15-minute time frame. If I was being accurate, this is where I would have mapped it, because this is where it bounces. You see, and look what happens, guys. The stock spikes, can't hold that level, and then you go short. This is what the Stephen Duxes and the Tim Grittanis, this is me. This is what we do. You know, Modern Rock. This is Alex A2R9. This is what you do. You just look for the spikes into those key levels, and when you get those spikes, you're gonna get what's called gap exhaustion. So the stock, when you have this kind of momentum where it just goes up on up, eventually it's gonna have a pullback, and it just spikes into a key level, and then it just kind of fades. That's what happens. And if you notice the volume, it only has 7.6 million volume, but its average has been 16 million, actually 10 million over the last 30 days. This is the actual daily volume, and this is what it's been over the last 5 days. It doesn't have the volume. So you know what, I would be looking again to see how it reacts, just to see. All right, maybe, you know, it's not a lot of range, but what's great about these stocks is that you can go in very, very sizable, because it has volume, enough liquidities that you can put in a lot of shares, and you're going to get executed. You're not going to get a lot of slippage. All right, and you can go short. And E-Trade probably ain't going to have shares to short of this, but E-Trade, I'm sorry, Thinkorswim won't, but E-Trade will. You know, most of the other brokerages would have shares available to short of the stock. So just to watch, see what it does tomorrow. See if it re-attempts that 420 level, can't hold it, and then fade and take it short again. All right, so I'll put NBEV. All right, and then you can do the same for like the stocks that that have the biggest drops. So like if I go to like just to show you the opposite, and then I'll end this video, or I'll show you like 1 or 2 plays that I took and just talk you through what I was thinking about. Like biggest percentage. Oops, that I want to do losers. Okay, losers. So these are the biggest percentage losers, right? So this is Vail was the biggest, had the most volume in terms of percentage losers. So let's look at a stock like Vail, right? Let's say I like to look at these stocks too, just for the same reason why I like to go long. Now, what you want to do is you go in, you say, okay, let me see what percentage of the stock. So if I go to Vail, see if it comes up. It's a materials company. Only 2% of the float is short, so you know it's a huge market cap company, right? So you know, you don't they don't have to worry about squeezes and things like that. Now, what I would be doing on a stock like this is, okay, this was the low, right? So let me go back 30 days on a 15-minute time frame. Okay, all right. So oops. So I would mark the low, which is at 13.13, all right. And then I would mark the high, which is 13.35, and then I would absolutely want to mark this, because this is like this has a lot of volume, 4 million shares, so that's 13.44. So it's going to need a lot of volume to break above that. And what you want to do is a lot of times to see, you know, and then 13.78, this is another pivot point, and then right here, this is another pivot point. So I would put a stock like this on the watch list just to see. Okay, let me see. You see how it's going to react at the open tomorrow. Is it going to spike? And if it spikes, I would like to see, is it going to retest that 13.33 level, 13.34 level? And if it couldn't hold it, then I would reshort it, because it's still on a downward trend, you know? Or if it broke above it, see how it reacts. At one of these levels, it's more than likely going to pull back. Now, let's say it got above 13.44 and held, and you knew that had a lot of volume there, then you can go long risking off that, because maybe now it's on the upward trend, and I would be looking to cover it this 13.68 and just ride it, you know? And that's kind of that's what I like to do with these stocks that kind of tank. That's how I like to trade them. I'll put Vail on there just so you can see. That's how it reacts tomorrow. But yeah, you just go through these stocks like JD's been on this huge downward trend. You know, it's just completely getting eviscerated. And tomorrow and this stock trades with a lot of range. So, you know, this will be the last stock I put. Because, you know, this could take a lot of time going through each ticker, trying to figure out what you want to trade and stuff like that. I'm just trying to give you a sense of what you're looking at when you're looking at a stock chart. And you see how these lines mapped previously. And if you notice, right, so, and all I'm doing is mapping the support and resistance levels. Look what happens. The market opens. This thing has just a major tank. It goes down, find support at 1934. It spikes, and then it couldn't break that 1970 level, which was a previous level of support that I had mapped previously. 1973. Let me see why I had mapped this. I'm not sure why I had this mapped at 1973 specifically. And I could have just put a range and not been specific. But let's say if I remove this, and if I'm looking at this, the key level for me here would be here, this 1935 level, because this is where it found support, this is where it found resistance, and this is kind of where it pivoted. Oh, that's why. This is why, right here. Okay, there's 1971. Yeah, that's all. That's why I mapped it. So, you know, if I go back now and I look at the stock, all right, it found its support here at 1921, right? So let me move that. Let's put 1921 here. And I would see how it's going to react at the open. Is it going to break above now? This is a 5-minute time frame. The 5-minute time frame, this is kind of where it had resistance, you know? So it double topped here and faded. So to me, that's a key level, 1945. So I would see how it reacted to this level. If it broke it, and it couldn't hold it, all right, then you would then just go short, risking off this key level. All right, so that's what I would be looking at for tomorrow to see how JD acts. Now, if it broke above 19, now if it broke and held 1945, I'd really be more comfortable going long over 1950, because 50 again is a whole number. It's a psychological resistance barrier, and this level right here, this 1951 level, this has a lot of volume in this 15-minute candle, 5-minute candle, sorry, 1 million shares. So you're gonna need a lot of volume to break this. Think of this as a wall. Think of like, if you close your eyes and you vision this, think of like the word volume, and it has two hands and it's holding down 1951, and then you know, you're seeing the buyers trying to push that wall back, but you need more than what's here, that 1.19 million shares. Like, for example, on 10,000 shares volume traded in this 5-minute time frame, or 100,000 shares, it's gonna be very hard to break and hold this. You need volume, you need buyers. So, and all these people are underwater, so just be mindful of that. All right, so just so that's something to think about. So I'll put JD, all right, and I'll end with that. Just so you know, I took a trade on CRC. Let me explain what I explained the trade. I found this trade organically. I think it was on this day, and I explained to the group why I took the trade. So a couple of days ago, I actually walked my group through this trade. I found this trade organically. I actually was watching Narcos, came back to in the afternoon hour, came back, pulled up, started looking at charts, see what's popping up, and I caught CRC, and and what had happened was, let me explain how. So let me clear this so you can see. Right, so I was looking, I caught CRC, and I got a piece of this on the downward trend. So I can't even remember exactly. I would have to go back and look at the chart, but okay. So I caught it moving up, right? And I was saying, hey guys, I think CRC is good, ready. It was forming. Yeah, I remember now. So I saw this. You see how it is a shoulder, and then you got that little pop. So it was in the beginning process of forming a head and shoulders pattern, and I caught it right away. So I was talking to the group on the Discord chat. We have a voice where you can talk. I didn't even know you can do that. I'm real stupid when it comes to this sort of stuff. And I said, guys, you know, CRC is going to pull back. I'm going to take it short, and I'm going to walk you through the short. Me executing the trade and talking you through on the actual short. So it was like several guys in the voice, and I showed them, okay, so let's map the overhead resistance. So, you know, I had mapped my overhead resistance. You know, I had mapped these levels. right? So I had mapped my levels above, and I see the stock now. What I told these guys is, all right, if it can't hold this 2160, this is where I want to short. But what you want to see is, and I was looking, let me pull up a 2-minute time frame, because that's generally what I do. What you want to see is, look, right, you got the pop, right? And when you get the breakdown, what I waited for was the spike. So you see this spike here? Right into this spike, you see how it popped into that resistance level and it couldn't hold that, and you see this weakness. This is where, when I saw that this got this little pop, this little weakness, this is where I went short, and I got executed right into this area. This is where I really should have shorted, but I shorted right in here because I saw the continued weakness, risking off this, and I took it short, and the stock came down. I wish I would have held. I didn't hold. I actually covered. I want to say it was like, I think it was right into this area, this 25-20 level. And the reason why I covered here was because I just saw that this was a previous level of actual support. So I covered, and the stock actually continued. It faded, right? It popped right into that area, and look, it couldn't break it. That previous area was support. Look, you see? And then it continued to fade. I was already out. I was telling the group that by then I was done. I had traded. I was up like 2,700 on the day. I wanted to secure my gains. I told guys, I said, look, I'm not going to short again, but if this thing pops and gets rejected into this 27 level, you go short. And sure enough, we watched the stock continue to tank, and I didn't take another position on it because I was like exhausted from trading. Trading is stressful. And sure enough, it got down to this VWAP, which is clearly, you know, and I was telling people like right into this 2440 level would be the area that I would cover, because this was an area of clear support below. But it actually got to a little close to it. Didn't get exactly to it, got close to it, and you know, right around VWAP, it just spiked and it got back up. And then look where it couldn't break. It got back to this 2550 level, which was a previous level of resistance. I'm sorry, support became resistance, and then they faded again. You know, and then it fucking tanked. And then my friend made me very aware had I held my position overnight, I would have been up about like 12 grand or something like that. But that's the way it goes. But just to show you guys that it's all about support and resistance, waiting for those pops. So if you're looking at a stock that's weak, you don't want to chase the weakness. You want to wait for the stock to show upward strength, and then get rejected into a key area of resistance, and then you go short. That, because now you know what you're risking. If you chase, what if you chase and the stock just turns around and rips you? You know, you don't want to do that, guys. You don't want to be chasing stocks. That's not a good that's not a good strategy to form, because if you form that kind of strategy, you're gonna eventually get ripped. You know, the stock is gonna go against you, and you're gonna lose a lot of money. You should always have a clear risk. You don't want to chase. Like someone in our group, not chase the stock clearly against the rules that I teach, and just chased because they saw the stock was running, they chased, and then they got dumped on. So, you know, you don't want to do that. You want to have a clear defined risk to go. So for example, if I was going to go long on CRC, I would, since this was the previous high, I would want to see it break, pull back, and you see how it gaps above, like you see how it went above, it pulled back, like right in here, like this is where I might have gone long, because it pulled back and it's holding above the previous support level, and then it rips. But if you see it tank, and then look what happens, it holds at 2440, defends it, and then it starts moving. This is where a very good sign to go long, because it kind of double bottomed here at this point. You know, tested it here, you know, and then it tested it here, and then you go long. And this is where all the smart buyers are going in. They're waiting for it to pull back, and they're saying, fuck it, if I miss it, let's say it keeps going, all right, then I missed it, I'd rather see it pull back and retempt this before I go long. That is how you should be trading. Same thing when you go short. You know, if a stock gaps up and it goes to this 2440, look what happens the next day. It can't break this. You see how it spikes, and this is a great level to go short. And let's say you miss it on this pop right here, is where you could go short, because you could say, hey, you know what, it popped, it didn't hold, it's still showing weakness, and then I can go short. And then look what happens when it pops, right? When it pops, it can't break. Now this is the actual key level right here to me, honestly, but it popped up into this level right here, and this is a big consolidation level here. It couldn't break it, and you could have went short. And if you went short here, you can say, hey, the key level here above this was this 2440, so I can risk off 2440 if I go short here, which is some range, you know. So you got to be careful, you know. So that's just something to think about, guys. So that's really what I wanted to talk about. Again, guys, it's support and resistance is what moves stocks. All right, guys. And again, you know, if you feel the need to be in a room in order to think that you're going to be successful, you already have the losing mentality and you're going to lose all your money in the market. Not to say that you can't get education in these rooms, but you don't need the rooms. If you go in a room, make sure that you're learning. And if you're not learning anything, get the fuck out. Learn what you need to learn and get out, because if you feel like you need the room in order to make money, you're just going to go broke. All right. So hope you enjoy the rest of this weekend. Let me know what you think. Leave some comments and have a great